Good morning, traders. Welcome to an Ichimoku Cloud Chart Market Review of the S&P 500 Index. The correction risk highlighted on the last webinar, the 19th and the 22nd, that finally materialized. The S&P was a little bit extended from the top end of the cloud and then pulled back. And when the first level of support that failed was the front end of the cloud, then the market briefly rebounded from the standard line of the cloud, only to snap back and then collapse right through that support level to test the top end of the cloud as well as the top end of the front end of the cloud. The market finally managed to rebound from the old low here, from this January low, and then we're now back above the top end of the cloud. So this cloud chart level here, 3774, is the critical support zone. And if this support level holds, the market rally should be okay. But if we're starting to dip deeper into the cloud and fell below the 3705 level, then the market outlook's going to change from bullish to bearish. Price action below the cloud is ultimately bearish, and price action above the cloud is a bullish scenario. So we got our correction after the market was a bit extended. There was plenty of back and forth swing trades in and around these levels, but the critical for this week for the market to stay above 3776, and in a very weak market we can test 3705. So there's a swing trade opportunity from these levels. Front end clouds 3789, back up to the top end of the cloud here, 3869 is the next resistance target. Now turning to the 4-hour chart, we can see back here we got our sell-off. It sliced through the standard line and the baseline of the cloud, sliced through the front end cloud support, and we did manage to find support here at this cloud chart shadow, the old support zone of 3729, and we did manage to swing trade that back up to the bottom end of the cloud. So the market managed to rebound from this significant support zone. So this is a cluster support where you have the cloud and you have the price action in and around the same level. So this is been a significant support zone. You can see every time it gets to the bottom end of the cloud, we can swing trade it back up. Now the upside support now in the 4-hour is this 3821. So the market needs to stay above that level, with upside resistance targets is 3873, and then this top end of the cloud 3896. So there's a swing trade possibility if support holds in and around these levels back up to the top end of the cloud, and then we'll see what the market's going to do at that level. Turning to the hourly chart cloud, we can see back here when we had the last update, the market eventually sliced through the cloud. So that was a short selling on an hourly basis, and then rallied back up. Another short selling opportunity as it sliced through the cloud here. It managed to find support pretty much close to these old cloud chart levels. We can see there 3782, and right here at the bottom end of the cloud 3753. And then pretty close to this cluster of support here, market managed to rebound back up to the bottom end of the cloud. So now the first target is on the hourly is this 3859, and it will be interesting to see if the S&P can break past that level. But the 60-minute cloud is somewhat bearish at the moment because price action is below the cloud. We do need to see the market close and trade back above the hourly chart. So there is still more downside risk based on the hourly one. The 4-hour one is critical for this support level to hold. The daily one, let's go back to the daily one. We can see we had a successful rebound from the top end of the cloud, pretty much close to the bottom end of the cloud. So the front end of the cloud is now a support zone, 3791, as well as this. This is now 3775. These are key support levels for possible swing trades, with upside resistance there at 3868. But as we can see on the weekly chart, we're still very extended from the top end of the cloud. The front end of the cloud here pretty much almost came into support. The market's back above this turning line of the cloud, and if support fails here, we're going to hit the front end of the cloud 3697, and then there's significant downside risk to 3583 if the market remains weak, but still a bit extended from the cloud on a weekly cloud chart basis. So there is still a fair bit of risk in the market. But for now, looking at the daily, buying support, swing trade that back up to resistance zone of 3869. So critical week ahead for the S&P to remain above the top end of the cloud. Until next time, happy cloud chart trading.